The world is changing fast, and businesses are facing risks they never saw coming. From the wildfires in California, winter storms in Kansas, supply chain disruptions, cyber attacks, traditional insurance companies are hardly covering anything today. So there are so many businesses that are left exposed, struggling to find a solution to their problems. But there is a way for them to take control, and that's captive insurance companies, either 831As or 831Bs. Today, in this video, we'll break down how these strategies help businesses manage the unpredictable, lower their costs, and help them build resilience. Why don't traditional insurance companies cover today's risk? Natural disasters are making coverage more expensive and harder to get. So insurers are pulling back in high-risk areas. State Farm, Allstate, Farmers have almost completely scaled back in California, leaving businesses stranded. Then you have severe weather events are becoming more and more common. So many policies either exclude these or they cap the coverage. Business interruption, that coverage often falls really short when it comes to covering the business. And the pandemic exposed massive gaps that many businesses thought they were covered, but then they weren't. So any small-scale disruptions like supply chain issues can be just as devastating to these businesses. When insurers limit their payout or deny claims, businesses are left covering the losses themselves. And then you have emerging risks that are often excluded from coverage. Cyber attacks are on the rise, yet many policies either exclude them or don't provide enough protection. Reputational risk. Social media can destroy a brand overnight, but there's no standard insurance for reputational risk. Then you can have regulatory changes like the FDA red dye number 3 ban that is going to cripple industries, yet the traditional insurance policies don't provide coverage for evolving legislation. It takes a while for the insurance companies to catch up. So what can be done? Well, captive insurance companies offer a proactive risk management solution. Let me step back. If you haven't watched any of my other videos, what is a captive insurance company, and specifically what's an 831B? A captive insurance company is an insurance company that a business creates to insure its own risk, allowing it to, let's say, formalize self-insurance where they can get their captive approved to cover specific risks that their business has. Think of it like bespoke insurance. 831B captives let businesses set aside money on a pre-tax basis for future claims. So this creates a custom safety net for the risks that traditional insurance companies ignore. So why did Congress create 831B to begin with? Well, in the late 70s, early 80s, skyrocketing premiums left businesses with limited or no insurance options. Congress responded with the 831B legislation, giving businesses a way to formalize their self-insurance. Today, with increasing exclusions, high deductibles, and insurance companies pulling back, 831Bs are more relevant to businesses than they've ever been. So what are the key benefits of a captive? First is customization. Businesses can insure the risk that mattered most to them. So when an insurance company goes out and writes an insurance policy, they write it for a lot of different businesses. So if you use, let's say, general liability CG0001, that policy is used by developers, contractors, pavers, roofers, schools. I mean, across the board. Now, what do those have in common? Nothing. So by creating your own captive, you can write the risks that matter most to your business, because you can rest assured if your business faces a certain risk, it's likely excluded from a policy. So that's the first thing. Second thing, cost savings. So instead of paying the expensive premiums to the insurance companies, businesses retain the premiums themselves, and any unused premium, so it's premium minus their expenses and minus their claims, that's theirs to keep instead of giving it to the AIGs and Zurichs of the world. Next, flexibility and control. Businesses, and you probably felt this, you're at the mercy of insurance companies. They own the insurance marketplace. But if you have your own captive, you're not at the mercy of them anymore. Financial stability. Captives create a reserve fund for unexpected claims and unexpected disruptions that a business has. So, how do you implement a captive for maximum protection? Well, financial advisors play a key role in creating captive insurance companies. The best time to prepare for a crisis is before it happens. Risk assessments can help identify coverage gaps in areas where a captive makes sense for the business owners. Their advisors can help the businesses navigate the tax compliance and administration to make sure that the captive is running smoothly. So, what does a business need to do in order to set up a captive? First, they need to identify their business risks. What risks aren't adequately covered by the traditional insurance market? Then, work with a qualified, that's the key, qualified captive insurance company manager. So, the proper setup, once you identify the risk, the proper setup is crucial for compliance and success. So then, once they've set it up, gotten it approved, then you have to fund the captive strategically. Businesses, they need to set aside money and pay premiums on a pre-tax dollar to manage future claims. Not all your coverage goes into the captive, so this has to be integrated with your traditional insurance coverage. A captive works alongside your commercial insurance to create a comprehensive risk management strategy. And then this isn't a set it and forget it kind of thing. So you need to continually do adjustments to keep the captive and your traditional insurance aligned with the business needs, because the risk of the business changes over time. So regular reviews ensure that the captive remains effective. Then as the business grows, captives can evolve to provide broader coverage. And working with the right people ensure compliance with all of the tax regulations and industry standard that must be adhered to. So what happens when a business embraces captive insurance? Well, the first main benefit is they get greater resilience in the face of uncertainty. Remember, we started out talking about fires, floods, winter storms, all these other things. But when you have your own insurance company, it gives you the ability to cover the things when you need it covered, for the risks you have in your business, at the price you want to pay. So that once you have a captive, businesses don't have to scramble for insurance solutions during a crisis. They will have a financial cushion that's already in place to cover the business in the event of anything catastrophic or any even minor disruptions in the business. And I often tell people it gives you a competitive advantage. Captive owners have more stability and predictability in the financial operation of their overall business. Then you have the risk of doing nothing. So without a captive, as I said earlier, businesses are at the mercy of a tightening insurance market. So those who rely solely on traditional insurance risk being underinsured or denied coverage entirely. The next disruption could be the one that forces a business to close down its doors for good. Just today, I was talking to a person that runs a very large HVAC, heating, ventilation, and air conditioning company, national company. And we were talking about how he has the inability to get insurance at this point because he had two major automobile accidents. And while two automobile accidents are bad, you have to put it on the scale because he has almost 1,000 trucks on the road. So the captive will give him the ability to purchase the insurance that he needs at a cost he needs to pay, bringing in reinsurers, and he doesn't risk the insurance company moving his premiums up or down or not having the coverage and going out of business. The future of risk management is proactive. So captives aren't just for large corporations anymore. They're now a tool for small to mid-sized businesses who want to insure their businesses and take that control back. So the financial advisors who understand and recommend captives will set themselves apart as forward-thinking experts that can help their clients. So in summary, are you a business owner that's struggling with insurance gaps? Well, now is the time to look at captives. Talk to your attorney, accountant, financial advisor. Call us to learn about how a captive insurance company can help you take control of your overall risk management strategy. If you enjoyed this video, please subscribe down below. And we give these videos and insights on alternative risk solutions, captive, financial strategies. So please, if you have a question, comment, or concern, drop it below. Somebody will get back to you. Feel free to call our office. And we'd love to see if a captive makes sense. So and think about, put in the comments below, what is the biggest risk your business faces today?